Good day, fellow investors. The stock market is constantly beating new and new highs, and a question that I get very often, is it a good time to buy stocks now at new highs? Everybody is scared about crashes, about what will the returns be, and I really want to discuss this buying perspective, just a quick video on when it's the right time to buy a stock. Also, I got this comment on my Alibaba video that I made a few weeks ago, and the stock is now, a little bit higher, and immediately comment comes, Sven, is it still a good time to buy this stock now? If we take a look at the company, I don't know where we bought, somewhere here, I don't even remember exactly, but okay, now it's a little bit higher, and everyone is looking at where will the stock price go. That's insane. That's completely wrong, because okay, yes, it was cheaper here, and we bought here. So why didn't I buy here? Why didn't I buy here? You constantly focus on prices, but that's wrong. What you have to focus is, what am I paying for the business? That is investing, and that's all I want to discuss in this video, because focusing on prices is wrong, because then it's about speculating, it's about betting on prices going up and down, and that's not investing. Investing is owning. If you buy Alibaba, you own, or you don't own, you have contractual agreement, but that's another different story. You have to know what you're owning, why you are owning it, what's the percentage of your portfolio. I never mentioned how much of this I bought, and how does it fit you. That's my main message. Not where will the stock go. Nobody knows. This Alibaba stock can fall to 120 if there is bad news, or can go to 400 if there is good news. And that's something that nobody knows what will happen in a year. But do you like the idea of owning Alibaba compared to other things in your portfolio for the next 5-10 years? That's investing. And my favorite story when it comes to these prices, let's say that this is a stock 1981, nothing. It hit peak at 600, then it fell to 400, and this is August 1982, and then in October it was back to 600. And now, given that it went up 50% in 3 months, somebody would say, oh, now it's too expensive, I'm going to wait for it, I'm not going to buy it, too crazy, right? Too expensive. Well, look at what happened over time since then. So it was at 600, and now it is at, what is this, 340,000. So by thinking, I'm not going to buy this because it went up 50%, you would not have turned $600 into 350,000. That's anchoring, and that's focusing on the stock price that costs you a lot. Another example, a stock that I bought, I think it was in May when I did the research, I bought around $13 for my stock market research platform, and then really it went up, up, and up. And all those investors that looked here, I remember the comments, Sven, it's 17, should I buy it now because you bought earlier? And that's why I don't like to show the prices what I bought, because it leads to anchoring. And that is a costly mistake. Should I buy it here? Should I buy it here? Should I buy it here? Well, the stock is now where? At 31. So anyone that you bought it here or here would have made a lot of money. Same with Berkshire. Does it really matter whether you make 500 times your money or 300 times your money by buying at 600 or 400? Keep in mind, investing is about being an owner and looking how the business, how much are you paying for the business compared to other opportunities you have, not where the stock price was or wasn't. Another great comment on all these growth stocks that we discussed, Lynch plainly states to wait until growth companies are profitable before investing in now. Proof of concept, proof of business model. Wait, everybody wants to buy stocks now, tomorrow. Sven, give me 5 stocks that I can put all my money in. That's not investing, that's speculating, and that often ends badly. Let me show the Microsoft example, because he talks, Peter Lynch, 1989 book. He talks about Microsoft in this book. And let's look at the stock price. So you didn't have to buy Microsoft at the IPO. You could have waited for, what is this, 10 years and then buy it. And with the dividends, you would still have made 100 times your money, or 50 or whatever. And again, this again shows, okay, you don't have to invest immediately as these growth stocks go public. Proof of concept, growth, and even here you would have made still a lot of money. So it's not about the price you're buying. If you're buying great quality, that's the key when it comes to investing. And everybody asking me 10% up or down, I really don't know. That's not what I do. I buy businesses, I structure my portfolio for long-term business buying, and that's what I try doing. And it's very difficult in this environment of all crazy stocks, but we do our best. So to conclude, yes, stock prices go constantly up and down, but don't chase stock prices. It's impossible that you keep chasing stock prices over 40 years. You will get married, you will have kids. Now it's fun on your mobile, on your Robinhood or that, but that's not investing. Investing is about, okay, I own this, these are the earnings, this is the business, how does it fit my long-term goals, what's the margin of safety, what's the moat, what's this, what's that, and that's something sustainable over decades, and that's the way to invest. If you like this way of investing, click that like button for more videos and consider subscribing if you haven't. Thanks for watching, I'll see you in the next video, and I'm looking forward to your comments on this very important topic.